In this episode of the Stock Scores Market Minutes, I'm going to show you how to make more money by adding to your winners. Plus, I'll do my regular weekly market analysis. We'll scan the market for some opportunities and then look at the trade of the week on VKTX. All right, so let's get into this week's topic straight away. How to make more money by adding to your winners. The reality is that out of 10 trades, perhaps one or two are the big winners. And those are the ones that we want to really focus on. Those are the ones where the profits come from. So why not add to those positions when the market has proven you right? When you have a winner, add to them every time there is a new entry signal. And that can be a very short-term entry signal, for example, a flag pullback and then a break of the flag, or if there's a consolidation and a break of that consolidation. I'll show you that on a chart in just a moment. What's critical is that we're using the profit from our previous positions to mitigate the risk as you build a larger position. So let's take a look at an example from Friday's trading. This is a stock that went up all day long, a great stock to add to. The original entry signal was there on the action candle. And then there was another break from low volatility there, and another one there, and another one there, and then a flag break here, and then another flag break there, and another break from sideways trading there. So we had at least 6 signals to enter this stock, and each time you can use the profit from the previous position to add to that position. And the reality is when a stock is working like this, it's because some large fund is accumulating shares, and they're going to be doing that all day long because they've got some new information that justifies them willing to pay a higher price. So ride on their coattails and just add to that winning position. You can ultimately make a stock that, like this one, where it made a 12 RR, you can make it earn 20, 30 RR simply by betting more on a winning horse. All right, let's get into this week's market analysis, starting off with the US markets. And our first chart is that of the S&P 500 30-day 60-minute chart. And you can see we had a little break from a pennant pattern on Friday, and that was a positive sign for the market, indicates that we're going to try to make that move back up to the highs from the previous week. So that's a positive. Still, though, we are stuck in this sideways range with a lot of volatility, which demonstrates the market is uncertain. So I think you have to take a pretty short-term trader view to the market right now. There are opportunities to move in and out of stocks, but there's also big macro risk for the market that can cause quick sell-offs if things aren't going well. For example, China trade, or is the economy slowing down? We've seen those headlines grip the market for a day or two and cause some quick sell-offs, and that's fine as long as you're willing to be nimble, and that's, I think, the approach that you have to take. Now, looking at the longer term chart, we're really stuck in a sideways range that we've been in for 5 or 6 weeks. We had that nice rally through January and February. We've paused here at resistance. We haven't been able to really break through, but at some point we're going to get through that 285 level and head up towards 292 or so on the SPY. So that's what we want to watch for. I think now that earnings season starts up again in about a week, you'll get that flow of news, and if earnings are good, then we should be able to break out of this range that we've been in. And of course, if there's anything positive that comes out on China-US trade, that'll be a catalyst for the break higher as well. Looking at the Russell Small Cap Index, which of course is the lower valued companies, they were dead for a long time, but they've made a bit of a resurgence. In the last month, however, they've been stuck in this little downward sloping channel, but we're at the top of the channel and we may see it break out and resume the upward trend that started at the end of December. So what you want to watch for is, do we get through that high point there? And if so, those lower price stocks will generate some action again. They've been a little bit quiet in the month of March, but let's see if we can break out of this pattern and move up toward the highs again. So something to watch for there for those that like to play the lower price stocks. All right, on to the Canadian markets. We always take a look at the TSX first on the short-term basis. And again, kind of stuck in this pennant pattern, much like the S&P was, but it failed to break out. It tried on Friday morning, it failed to do so, but I think it probably will. So let's keep an eye on this. If we break to the upside through that upper boundary of the pennant pattern, then these stocks should move up short term. Longer term chart, kind of similar with the S&P, where we've been in this sort of sideways pattern for the last month and a half or so, but much closer to that longer term resistance. So if we do break out here, we're going to get stuck at that upper threshold for the market from the highs of last summer. And so I wouldn't get too optimistic about this market until it can break through that resistance and move to all-time highs. Looking at the Canadian micro caps, the TSX venture market, those cannabis stocks, mining stocks, very junior oil and gas stocks, they've actually been doing well so far this year. A little bit of a sell-off the last couple of weeks. I think we probably bounce because we've retraced back to support. I think we're going to move higher here. I'm seeing some interest in those cannabis names, but it hasn't been able to grab great traction yet. If it does, we could see another rally out of this market. But wait for that flag pattern. The flag pattern is this little pattern right here. Wait for that to get broken to the upside before you get too aggressive on those stocks. Looking at currencies, US dollar, another strong week for the US dollar, now testing these highs here. And if we break through that, then the US dollar should head up toward those highs. After this good week that we had last week, I think we'll probably stall this coming week, but ultimately the bottoms are rising on the chart. That's a sign of optimism, and therefore I think the US dollar goes higher from here. Canadian dollar still struggling with that downward trend line that we've been talking about for months, and until it can break through that downward trend line, I wouldn't expect great things from the Canadian dollar. There is some potential here because we have a rising bottom forming. We just need the breakout through that downward trend line before you want to get too optimistic about strength in the Canadian dollar. For now, I think it's a bearish chart. On to interest rates, and of course that's been an important story because we had that breakout 2 weeks ago. We talked about that in last week's Market Minutes video from a rising bottom, and that points to higher prices for bonds, which means lower interest rates, and I expect that we're going to get up to that resistance level that I've just drawn there, about the 129 mark on the TLT, and that means interest rates coming down. Many people now starting to speculate that instead of raising interest rates, they may actually get a drop in interest rates in the United States to combat a little bit of a global slowdown. On to commodities. Well, that strength in the US dollar hurts things like gold, and you can see gold sold off last week, and that is a sell-off from a falling top. So you've got your upward trend line. You could argue that we've broken down through that. I think this is a pretty bearish sign for gold. It's not conclusive yet. We haven't made a strong break through that downward trend line, but certainly it could happen next week or in the next couple of weeks. So I think you want to be very cautious with gold names if you own them. Oil has been able to do well despite strength in the US dollar. Typically it will get hurt by strong US dollar, but oil had another decent week. Nothing earth-shattering. It's not like we're moving sharply higher. It's just sort of a gradual move upward in that upward sloping channel. And until the trend line is broken, I think you remain optimistic on oil, but still, because of the lack of real excitement, I don't know that it's a great place to trade. It's just one that's slowly stabilizing and improving. Finally, the fear chart. We always like to take a look at the chart of the VXXB just to see where fear is. And after a little bit of a spike a week ago, we have trickled down again, and it seems to be that fear is dissipating. I think this can come alive at any time, and so I always like to keep an eye on this chart because it does show when investors are scrambling for the exit door. But typically, these little rallies are short-lived. You can see on this chart, there's been a number of them. Every once in a while, you get a significant one, but for the most part, they're little blips, and then ultimately the fear goes away. So my ratings then, still neutral on US stocks in both time frames. We're just struggling with that resistance, and until we break out through it, I don't want to get too excited, but there are pockets of strength in the US stock market that we can take advantage of by looking for those action candles. Canadian stocks, same story, neutral in both time frames. Gold, neutral long-term still, but I'm right on the fence about putting that down to bearish, and I've lowered my rating short-term to bearish on gold. And oil, bullish on both time frames. So, fear dissipated this week with some buyer interest showing up on Friday. Still, there is that struggle with resistance that we've talked about for a number of weeks, and that really stocks need to overcome. Gold is struggling with a strong US dollar, but oil seems to be shrugging that off and continues to meander higher. Earnings season starts in about a week. Expect this coming week to be a little bit quiet, but we're going to get back into earnings season, and that news flow always generates lots of trading opportunities. All right, now let's do our stocks to watch section. We're going to jump over to the Stockscores website. Before I do a market scan, I just want to show you that there's a number of free events, webinars, and live events coming up. If you go to the trader training menu and go down to upcoming events, you can register for any of these webinars. The first one starts Tuesday, April 2nd, and there's more to come. For those in Calgary and Vancouver, I'm actually going to be doing some of these presentations live. Haven't done that for a number of years, so looking forward to seeing many of my Stockscores members once again after a long hiatus from traveling. So go to the upcoming events page and give that a look. Different topics you can sign up for, as well as some live events. All right, let's do our market scan. We're going to run the Abnormal Breaks US scan this week. There was a few stocks of interest there. So I just selected the Abnormal Break scan, run the market scan. This, of course, a tool available to members of Stockscores. Anyone that is an investor or active trader member can run this scan. We're going to click on Go and look through some of the charts. So what I'm looking for on this is tall candles breaking from low volatility. And I'm looking at the mini charts. They're a little bit hard to see, but I can get a sense of whether there's something of potential there. For example, Limelight Networks, LLNW, breaking from this narrow sideways range that it's been in for some time. That's a rising bottom that shows optimism. You can see the volume spike there, price spike, and that is a good looking chart. I'd give that a 7 out of 10. And you know, sometimes you get these price moves from volatility with resistance. That's what's going on here. You can see the price action and the volume are spiking higher, but this is not low volatility and there's a lot of resistance there, and so that limits the upside. So that's not something that I'm particularly interested in. So it's really a combination of being able to see the abnormal action, but also understanding how to read the chart pattern. So here's an example of a stock that looks pretty good in the short term, but when you stretch it out to a 3-year weekly chart, I see that really this party started a number of months ago and we're now rallying into resistance where it's likely to get stuck. So not a stock that I would want to chase higher. If I owned it, I don't, but if I did own this stock, I'd be looking for the exit door as it gets close to $8 because it is a strong resistance level that is held up in the past. So I'll just continue to cycle through these. If there's anything of interest, I'll blow it up. This VKTX, a great trader. It's our trade of the week as a day trade, but it's also got a pretty good looking longer term chart as it's got the price action, volume breaking after a long period of sideways trading. A little bit choppy here, which increases the chance of a pullback before it goes higher. I'd give this a 6 to 7 out of 10. Let's call it a 6.5 out of 10. If it can continue to get some volume coming in, I do think it can head up toward that $14 range where it will encounter some resistance. We'll go through a few more charts here. This is a process that I run every day to identify those longer term position trades. If you have an interest in holding stocks for weeks or months, you can only do your research in the evenings. This is the process that I would recommend. It is not going to require that you are glued to your screen like a day trader would be. It's more for that person who can check the market once a day and look for those longer term trading setups. Let's take a look at Celgene. It had a pretty good move on Friday, and looking at the longer term 3-year weekly chart, you can see that it's breaking out of a cup and handle pattern. So there's your cup, there's your handle, and we're getting the break. Pretty good volume this past week. More expensive stock, perhaps not for everyone, but it does look like it will enter into a upward trend that could stretch out many months and ultimately get back toward the old highs. So it looks like a longer term turnaround chart on Celgene. I think that's about all that we're going to find for that scan this week. We've just got a few more charts to look at. At Home, a great day trader on Friday, but coming into resistance, not a stock that I would want to position trade. Galapagos, another big name mover on Friday, but coming into resistance, lowers the probability that it will head higher. This NICE, not a bad longer term chart, but because it's well into the upward trend, it's more of a hold than it is a stock that I would want to buy. As a buy candidate, it was really a buy way back here when it broke from that sideways trading. This tool is going to find those stocks for you, whether you can do the work on the weekends or in the evenings. It's a great tool for that. All right, let's jump back into our presentation. That was our stocks to watch. Now I want to take a look at the trade of the week, which was another stock where you could scale into the position. This is Viking Therapeutics, VKTX. Our entry signal on the action candle, that's the pink dot right there, came right at the open, 9:32, and it didn't do anything for almost half an hour, went sideways, and that gives you lots of opportunity to take a position. Ultimately, for $100 of risk, would require 830 shares, which is $7,445 in capital. But with margin, because you can margin a stock like this 3-to-1, it really only takes $2,500 of capital in your account to take that position. Now, this stock ultimately closed at an 8 RR. It actually hit a maximum of 11 RR and broke its upward trend line at about 9 RR. But if we use that closing price of 8 RR for the person that can only look at the market at the first half an hour of the day or the final few minutes of the day, it's a great trade. Makes 8 RR. That's an $800 profit on $2,500 of capital used. 32% return on a one-day hold. That's exactly what we want. However, we could also add to this position with scaling. There was another break there and a flag break here and then a pennant break there. So lots of opportunity to add to this position, ultimately taking that 8 RR to maybe double it to 16 if you can add at some of those intervals when new entry signals came along. So that is the Stockscores market minutes for the week. Lots of information. I'm talking pretty fast, trying to fit it all in as quickly as I can. But if you've enjoyed it, please click that like button, subscribe to the channel, hit the bell notifications icon to get email alerts when I upload a new video. I'm always uploading new content. Hope to see many of you at some of those upcoming events. Register those at stockscores.com in the trader training area. Most importantly, have a great week in the market and trade well.